At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected.
How's it going, fellow traders? Magic Trader here. Once again, welcome back. Nice to have you join me. It's Sunday. And let's get things started by taking a look at the positions held by the major institutions as of November 1st, 2022. And as we always do, let's begin by taking a look at gold. All right, so gold. We see some upside, all right? And why are we seeing some upside building? Well, we know why. Okay. Because we've been talking about how the dollar was hitting supply, and when the dollar hits supply and price drops, we'd expect gold to move in the opposite direction. So that's what's happening. You see gold moving to the upside. Now, when we look at the positions, we can see that as price is rallying up, the institutions are adding to their short positions, which is quite telling, isn't it? Leads us to suspect that more downside is coming on gold, doesn't it? Well, you know, our targets have not been hit on gold, so that would be a reasonable assumption, is that more downside is still to come. But interesting to point out that, you know, as prices moving upwards, the banks are accumulating a bigger short position, I should say. So be aware of that. Another thing I will point out is last week retail traders were very long, okay? And all throughout the week, as price was rallying up, they got into shorts, okay? So right now, retail traders are heavily short, which is just perfect for this rally up that we expect now. And then they'll shake them out of their shorts later on, and then reverse price to the downside. Now we have oil. So oil, we see movement to the upside here, but as price was consolidating on the charts, what were they doing with their positions? Nothing extravagant, okay? Nothing extravagant. Oil is one that I've been telling you, be very careful with it, because we're not seeing any specific trends. We're not seeing any strong accumulation of positions in any direction. So when there isn't any clear indication of what is to be expected, I don't like to trade it personally. All right, the dollar. So the dollar, what was I telling you about? Remember, I was telling you about how the institutions contacted an institutional area of selling. This is the institutional area of selling right here. Okay. And what were we expecting from the institution when that area was contacted? A push to the downside. That's correct. And where did we expect price to contact when it went down? This institutional buying area right here. And when the institutional buying area came into play, guess what happened? Price rallied. So as mentioned before, we have price stuck in between an institutional supply area and an institutional demand area. One of these have to break in order for there to be a move to the upside or to the downside. Now, let's go over to the positions. Interesting. Remember what I said. When the banks contact supply, what will typically take place? Profit taking. And we can see long positions are being reduced from 44 to 42,000. Okay? Shorts, are they concentrating on them at this moment? Not really. They're still cooled off. You could tell by the coloration of the cells being blue, they're still cooled off. Okay? So, pressure to the downside on the dollar. All right, let's take a look at the Aussie. Aussie, we have price dropped, consolidated, and what's going on? Increase in short positions, okay? Doesn't that remind you of something that we just took a look at? Increase in shorts as price is slightly starting to go up. Kind of reminds you of gold? Yes. Look at the long positions, cooled off. You see the cells? The cells are blue. What does that tell you? They are cooled off with their positions. They're not focused on longs. They are focused on shorts, though, as price is rallying up. That's the interesting thing I want to point out here. Okay. Another thing I'll point out is retail traders, they were mostly long before. Now they're mostly short. So they switched as the institutions are preparing to rally price up. Okay, so that's what we're going to be watching for this week. USCAD. Take a look. USCAD hits our target that we placed back on September 25th. Our target was at 139.35. Why did we choose our target here? Because this is the area that we suspected the institutions would take profits on their long positions. And when they take profits on their long positions, what does it do? It causes price to drop. Now look at that. Our target contacted and then price drops. Isn't that amazing how that works like that? Pretty incredible. All right, so let's switch back here. So when we look at the positions, we can see they dropped them from 58 to 55 down to 53. And then this latest consolidation candle produced a little bit of an increase in long positions, at the same time increasing shorts. So shorts increasing as price is getting ready to tumble over like this. Okay, so we're expecting more downside on the USCAD as things unravel. Interesting thing is retail traders were short, but they got short too early and price went heavily against them. Now they're getting into long positions as price is at the high, so not exactly what they're supposed to be doing. US Swiss, look at that, long 16 to 21,000. Shorts are cooled off. Price drops into an institutional area of demand. Response to the upside. Besides that, not much is going on. Retail traders used to be heavily short, just like the USCAD. Now they're more, just a tad, on the long side. So we do expect to see price drop a little bit more. This chart is a little bit difficult, a little bit more difficult than the USCAD. So it's difficult to determine exactly how it's going to be moving, but more weakness is expected for sure. Euro US dollar, interesting one. Now, if you remember, and if you've been following us for quite some time, you'd know that when we were back here in September, I had mentioned that the positions were so aggressive that they were going to have to start taking profits on their short positions. And I said, when they do that, it's going to fuel a move to the upside. And so that's exactly what took place. They started taking profits on those positions, and it fueled a move to the upside. So you can see here, oopsie daisy, you can see right here how price has been moving up. Okay, like that. And not only has it been moving up because of the closure of short positions, but look what they've been doing with their longs at the same time. Okay, we've seen this. Okay, we've seen this slowly, gradually build, and we've been making mention how it's likely going to continue in this direction. Here's the thing too. Retail traders, they're mostly short. Guess what they are now? Even more short. Okay. Now, if you've been following us on our Telegram channel, you know that we've been talking about how retail traders, they didn't know what to do all throughout down here. They were getting in short, long, short, long, short, long, but they were never fully committed in one direction. They're becoming more fully committed now to the short side. And with that, and with the banks increasing their longs, we suspect that we're going to be seeing a push to the upside on the euro. Pound rallied up into weekly supply, which we were talking about. Here's the thing, though. You can see that they're taking profits on shorts. That's what their main focus is on. Okay, 91 to 79, main focus, profiting on short positions. Now, look at long positions. All they've done is reduce them. Okay, so they're not focusing on longs like how they are with the euro. They're just focusing more on profit taking on shorts. And why is that? Remember the big spike down here? The news event that we mentioned last week? That's the reason why. Okay. Retail traders, what are they up to? They're almost 50-50. They used to be in a lot more short because they got suckered in short here at the at the lows, I should say. And so now it's about 50-50. There's not much in any direction at this time. US dollar, Japanese yen. Now, do you remember what we've been talking about? Do you remember how I had this area of supply mapped out on the charts? Just like the dollar, what do we say? Profit taking on long positions will take place here, which will fuel a move to the downside. Now you can see that basing is still occurring right now. You see these candles of basing? They're all within the same area, okay? So there hasn't been any strong momentum to the downside. But remember what we said. Look at the positions. Look at longs, 140 to 118,000. Profit taking on long positions, just as we said would happen, okay? Profit taking on longs. Do you see anything happening with shorts? Not really. A slight increase over the last 2 weeks from 30,000 to 40,000. But you see how cooled off these sells were, okay? These ones are not red yet. They're just coming out of cooled off territory. The main focus has been for them to profit from their long positions. But we are seeing evidence, okay, through here and on other charts that a move to the downside is what's likely to come because of profit taking, slow accumulation of a position. We're expecting a little bit more downside here. Retail traders, you know, they were mostly short. They're still mostly short, and it's too bad for them. As price starts to dip down, they'll probably start getting into long positions. Okay, last but not least, we got the Kiwi. Look at the longs increasing from 15,000, cooled off to 21,000, more aggressive. And profit taking on long positions from 28 to 24. Okay, we've been talking about this push to the upside, and it's happening. Okay, institutional supply is just above current price, and that's where price is likely going to be heading into. Retail traders were 50-50, now they're more short. Okay, as price heads up, retail traders get into short. It's too bad. Not what they should really be doing. Anyways, thanks, ladies and gents. That's it. That's your CFTC report for the day that was recorded on November 1st, 2022. Hope you enjoyed it. Please leave us a comment down below. Really appreciate if you do that. You know where to reach us, www.whiteoakfx.com. Thanks. Have a great one. We'll see you throughout the week. Take care.